Hi, my name is Travis Holloway, and I'm the CEO and co-founder of Solo. Solo stands for social loans, and it derives from having a brother who is currently active duty military. He's in the US Air Force, and I recall vividly a time where he called home because he needed money to fund a flight to attend the funeral of a friend. The flight was $300, and my brother called home to basically say, I really want to be there for my friend's funeral, but I honestly can't afford it right now. Fortunately for him, he had the luxury of calling home to our parents and getting a loan to purchase the flight. But for so many of his other friends, they didn't share that same luxury, and they were unable to get home to honor a fallen soldier. I recently went to visit my brother at his Air Force base in Dover, Delaware. Conveniently located just outside that Air Force base was payday and title lending institutions on nearly every single block. Now, I couldn't understand how could there be so many of these places on one street. So I asked him, and he said, you know, a lot of the people who are in the military, they live paycheck to paycheck. And it's very difficult to make ends meet, especially if they are single parents or have growing families. Individuals in the military also have very steady paychecks, which is why payday and title lending institutions prey on that demographic. Now, I've been asked to borrow small dollar loans from friends and family the majority of my life, and I can never really figure out why. So I started to do some research, and what I found really disturbed me. 76% of this country lives paycheck to paycheck. And even crazier than that, 47% of this country doesn't have $400 to solve an emergency cash need. That's just insane. Resources for loans under $1,000 are virtually non-existent. They're limited to friends and family, which, as many of you know, put strain on personal relationships and are embarrassing to ask for. Payday and title loans, which carry what I would hope you would consider predatory interest rates of 400 to 500% on average. That's just crazy. I'll just let that sink in for a second. The sad reality is that a lot of the individuals who are taking these predatory loans, they're not the lazy and unemployed. They actually happen to be some of our community's most noble citizens, our teachers, social workers, servicemen and women, and single mothers. When people live paycheck to paycheck, they're simply one surprise away from their financial lives being thrown away. So we created Solo. Solo is a mobile lending exchange created to provide more affordable access to loans under $1,000. The loan range on our platform is between $50 and $1,000. Borrowers' creditworthiness is determined by using our social credit score, which takes into account a borrower's FICO score, banking transactional history, and social capital. Social capital is considered friends, followers, network, and user engagements on social media platforms. Social capital is already being used and has been proven successful in emerging markets where traditional FICO scores are non-existent. Our score will become increasingly more impactful in the future because creditworthiness is still being determined by things like mortgage history, when millennials are living at home with mom and dad or renting. Car loan history, when millennials are literally sharing bikes in the street and taking Uber. And credit card history, when millennials are still using cash and are using technology to deal in cash equivalents on apps such as Venmo and Cash App. Our score will be able to more accurately predict a borrower's ability to repay. But our goal at Solo is not to be the end-all, be-all solution for our borrowers. It's simply to be a life preserver in times of financial crisis and a stepping stone to financial prosperity. Our solution looks like this: a wide open marketplace where anyone can lend to or borrow from anyone else in this country and eventually the world. This is not a platform where you can only lend or borrow from someone that you know, because that doesn't remove the embarrassment or strain on personal relationships. We believe that any individual who has discretionary cash should be able to lend that cash to help someone in need while still making a return on capital. We also believe that any individual who takes a personal loan should be able to improve their FICO score by repaying, which is why the loans on our platform will be reported to the bureaus. Our goal at Solo is simply to provide an opportunity for financial collaboration where everyone can prosper. So how does it work? Individuals will sign up using two-factor authentication. We collect all of the information that a bank would require to satisfy anti-money laundering and know your customer requirements. Users also connect their bank account directly to our platform. At Solo, borrowers set their own lending terms. In this scenario, this individual needs $300. She needs it for rent. She selects the payback duration, the interest rate to entice lenders, and submits the request. The only restriction on the platform is that interest rates are capped in order to prevent debt traps and predatory lending. Unlike other peer-to-peer lending platforms, lenders can select exactly who they lend to. They can also hedge risk by developing a portfolio of multiple loans. So now, for the question that I'm sure is in many of your heads. So Travis, what happens in the event of a default? Great question. On the agreed upon repayment date, there's an automatic debit directly from the borrower's bank account. Our Solo score factors in a user's payday as well as the average daily balance in that borrower's bank account. So in short, the odds that those funds will be there are high. We are targeting those noble citizens that I previously spoke about. And it's important to note that these individuals can afford these loans. They just did not prepare for their emergency cash need. And lastly, in the event that there are insufficient funds in that borrower's bank account, we are working with a new type of collections company, which is powered by machine learning and digital-first communications, which nurtures the borrower through the collections process and provides a tailored experience. This method has also been proven to make collecting on small dollar debt more profitable as well. As we look at the marketplace, we're just vastly different. It's important to state what we're not. We're not a bank, financial institution, lending company, money transmitter. We've eliminated the regulatory risk that early fintech companies face by not doing key things such as holding money, lending directly, or being involved in the transfer of funds. In regards to regulation, I've spent the last 6 years working in finance, and I pull from some of the greatest minds in the industry for diligence. So what we are is the first mobile-based, low-dollar lending exchange in this country. We've offloaded our risk to third parties. So in essence, we're Airbnb for loans. We have a transaction fee-based revenue model for which we have a published patent. This provides us with a competitive advantage as well as protection. Welcome to the future of personal lending. We are Solo. Thank you.